A bit of background. I think PASLA's of old, we've always obviously focused on kind of regional markets. I think years ago the whole of PASLA used to be market, updating or giving a little background about how their SBL infrastructure works. I think more recently we've just kind of focused on doing that for just one of the panel sessions. I think that kind of format maybe got a bit stale. So we're going to try something a little bit different this time. I guess we've still got a panel. We're going to do Taiwan, Malaysia, then Indonesia. And we want to try and, the reason we're in a slightly smaller room is we want to try and make it a bit more interactive. So rather than kind of focus on, how do you do stock lending in one of these given markets, we want to try and make it more about market developments, what's happening for the future. And so the way the format is, we've got somebody on each panel. We've got somebody representing a lending agent, somebody representing the borrower, and somebody from the market. Now, it's my pleasure in welcoming the three individuals from the markets, which are my friends Wayne from Taiwan, Shirul from Bursa Malaysia, and Hassan from KPI Indonesia. So really appreciate you guys travelling here to attend this. One thing I forget. In your conference bags, you've all got one of these, which is like a critique thing. So we'd appreciate that at the end of the session, or this session as well as the rest of the conference, if you could just quickly fill these in. There will be, we're going to put some boxes by the exits, or there'll also be a box at the registration desk. It just helps us to kind of manage sort of future conferences. So without further ado, the other thing is we strictly have half an hour for each session, and we have to be out here by 4 o'clock. So let's start. So we're going to do Taiwan first. So over to Paul Solway. Thank you.
Thank you, Martin. So if I quickly just introduce the panel here. My name is Paul Solway. I look after BNY Mellon's APAC Securities Finance Trading Desk, based out of Hong Kong. To my left, I have Phil Winter, who's the head of SEC lending for Asia ex-Japan, and we have, as Martin said, our friend Wayne from the Taiwan Stock Exchange. This is fourth time at PASLA, so most of you probably recognise Wayne, and he tells me on good faith he's looking for more and more friends every year. So please don't be shy introducing yourself to Wayne after this. So look, because Taiwan, I guess, is one of, well, relatively speaking, the more mature market of the three, we're sticking to just 2 slides, and Wayne has actually put together a very comprehensive pack for us, which you can download from the website or take copies afterwards. So there is a pack, but we're not going to use it for this panel, and that is deliberate. So look, a couple of Taiwan facts just to start off with, and apologies for those that remember these from Taiwan 2012 PASLA. Taiwan actually has the lowest birth rate in the world. It has the highest density of convenience stores. It has one of the highest recycling rates in the world. It has the lowest poverty rate and the fastest elevator in the world at 60 kilometers an hour, for those of you who have travelled in 101. The stock market opens from 9 a.m. to 1:30 p.m., which is some of the shorter length of market coverage. The stock loan market stays open a bit longer, from 9 to 3 p.m. So I don't know how people can accuse stock lenders for not working too hard in Taiwan. And as most of us know, the price limits of the stock market move 7% each way. There's a limit. From a strategy point of view, the emphasis is on services and high technology, manufacturing, which brings together funds, long-short funds, relative value, DRs, index arbitrage, plus a bit of M&A. Fees range from 25 to 50 basis points to 5% for specials. I think a few people remember that MediaTek got to 20% last year at one point. And look, SBL today, it's been open since 2003. It's an intermediated CCP style model. It has 3 options: the fixed, the competitive, and the negotiated. Again, we're not going to go through this in any depth, just going through the highlights. And clearly the TWSE guarantees the fixed and competitive models. In 2007, qualifying local securities firms can lend as principal from their margin pools, and effectively what this has done is created an onshore and an offshore lending pool of inventory that the investment banks and the borrowers can choose to borrow, and they've each got their advantages and disadvantages. But the great thing about them is they don't. Some might say they compete. I don't think they compete. They actually complement each other. Depending on where the stock's coming from, and they've got their relative collateral advantages and disadvantages. The onshore lenders accept collateral types of cash, securities, bank guarantees, Taiwan government bonds that are managed either by the Taiwan Stock Exchange or the TDCC or the margin brokers themselves. As for the FINI lenders, they obviously open their doors to cash, debt and equities, and which can be held bilaterally or by a tri-party agent. So to date, Taiwan has been a very successful market for the last 10 years, and it's well regulated, it's transparent. There's an open communication between the regulator, the stock exchange, and all the participants. I think it's been a real success story. I think the difficulty has been, as always, a question of supply, and this is certainly the case when it comes to sort of corporate action season, where the onshore inventory often has to be pulled back. So, look, certainly as a FINI lender, we're always looking for new lenders to actively participate in a lending program in Taiwan. And I think, from personal experience, a lot of people do turn around and say, it's a bit more complicated than some of the other markets. And where we're going to come from in this panel is really trying to dispel some of those complications, rather than just going through a presentation. So, challenging the perception of complexity is sort of our theme for the next 20 minutes. And we're going to ask a few questions of each other. And as Martin said, if you want to ask a couple along the way, you're more than welcome. So the 6 areas we wanted to focus on was documentation. It's perceived as too complicated. Operationally challenging, number 2. Number 3, there are high recall risks, buy-in risks. It's an expensive market, number 4. Number 5, it is challenging to short sell versus other markets. And number 6, there are higher regulatory risk concerns. So before we get stuck in, I guess I would like to open up to any of my fellow panelists if they have any introductory thoughts or comments. Maybe.
A few quick words in the beginning. Indeed, Taiwan is difficult for FINI investors, but I would like to point out three things. We are difficult indeed, but we are lucrative. We are difficult indeed, but the situation is changing. And lastly, it is difficult, but we work very hard in the exchange.
Thank you. So look, with that, let's kick off with documentation, and I'm going to have a stab at this, if I may. There are 3. Contrary to a lot of people's thoughts, there are actually only 3 basic documentations to get your head, to get a grasp of, in addition to the main stock loan agreements. 2 really relate more for the lender side and 1 more for the borrower side. You have the Taiwan addendum for the lender, where the client makes a representation of their eligibility to participate in a Taiwan SBL transaction and recognises the local authority and rules and tax implications. There is then a letter of entrustment, which the client or the agent via a power of attorney authorises a local broker to apply to the stock exchange for SBL account opening, to report on negotiated transactions and to collect and pay related fees and charges, and to deal with the compensation rights and interests of the underlying securities. And then the third document is the Taiwan addendum for the borrower. And this addendum is required to include a provision that regulates the regulations prevail in cause of a conflict. So certainly where I stand, those are the sort of 3 main documents: 2 for the lender, 1 for the borrower. There are a couple of others that are negotiated between the intermediary and the stock exchange, but that is the essence of it. And so, this view that it's a complicated market, it's even from a legal standpoint. I mean, clearly they've got to be negotiated, but it is the three main documents. So moving on, in the interest of time, operationally challenging. So, again, in my experience, not only have you got the sub-custodian, you've also got the intermediaries, the local broker intermediaries themselves that have been very, very helpful in assisting many FINIs, the borrower and the lender, in setting up their accounts and recommendations and running through the rules and the regulations and the operational procedures. And they really have helped, certainly in the houses that I've previously worked at. But maybe my first question, and I'll open this to Phil maybe as a start. Corporate actions and the long short, whether you're long over the record day or you're short over the record day. Is this a problem for participants?
I mean, good afternoon, everyone. I think the short answer is yes, without doubt. Taiwan is definitely one of the more challenging markets that we deal with in this region with regards to operations. Just to put it into perspective, there's 2 depots. If you're a prime broker, you have 2 depots in Taiwan and 2 callable cycles. And managing a broad-based inventory with trying to maintain a diversified supply certainly leads to a lot of operational issues on that front. You need a lot of inventory management controls. You need a lot of investment from an IT perspective. And a lot of this investment is very bespoke to Taiwan. So in these days where costs and IT budgets are very restricted, it's very difficult internally for most prime brokers to build something specific to one market in particular. With regards to the recall cycles, I think it is particularly challenging from a cost perspective because of the underlying transaction costs involved. So operationally, custodial transaction costs and brokerage fees and everything that goes along with that is cumbersome, as well as managing the recall risk to the underlying client.
You're not helping me here, Phil.
It's difficult to answer that one with anything other than a yes, it is operationally challenging.
Okay, well, we'll try another angle.
I think that being said though, if we're promoting this market to our clients, all of these things we mentioned, every prime broker has had to invest already in these processes, and they've had to build very robust platforms. Otherwise, Wayne and his team will write us a little letter at the end of the trading day to ask why we had an issue. So I think most of the investment from the industry has already taken place to make it a lighter note, and that our underlying clients don't necessarily feel this pain and these operational challenges themselves. So the demand is not frustrated with the operational challenges that exist.
So good news and bad news. The bad news is the truth is that during the dividend season or the AGM season, a lot of stocks which are eventually from the margin pool need to be called back. That's stipulated in the rule. And the good news is that our colleagues in the trading department is studying in the very initial stage to study the feasibility to do it in like the manufactured dividend without callback. The longer term it will be beneficial.
Looking for change, right? Yeah. Another one from an operational standpoint, the whole pre-borrow requirement for the short side. How does the market feel about that now? I mean, are people getting used to it? It was a bit of a troublesome when it first came in. Is this something that we need changing back again at some point, or what are your thoughts?
From the PB's perspective, it's obviously more challenging than a market like Hong Kong, where you just need a confirmation to hold. I would say it's very manageable, but there's a cost associated with it. So having to pay for supply without knowing whether or not you're going to actually get the demand is the biggest factor now with having to include those costs in the
Okay. Well, I'm going to move on now to the high recall risk element in the interest of time. you know, people are worried in Taiwan about settlement delays, penalties, recall, fines, etc., etc. I mean, again, looking at the rules of the exchange, you know, the system, you know, the local brokers are actually, you know, very careful about checking. There is, you know, the inventory checking system, isn't there, Wayne, whereby the brokers look in the SBL accounts or the main accounts where they're selling from and check that the inventory is there before they sell, which is a very nice, you know, fail-safe. I mean, I don't think any other market around the region has this, and it acts as, you know, in my opinion, quite a nice fail-safe to make sure that the stock is there, and then there's more chances on settlement day is going to be there.
I think the difficulty, the flip side of the coin of difficulty is the ID system. In Taiwan, we use the ID system. So each of every feeding has a specific ID number. And when they enter an SBL short sale order, the brokers need to check the availability of their share inventory. If there is no shares available in their account, they need to, the sellers need to show the proof of locate. They need to show the availability of the future arrangement of the shares.
Which, you know, goes a long way to mitigate the settlement risk. So it doesn't take it to zero, correct? But, you know, there are clearly always a chance of some operational issues. But from a structural point of view, it's quite a nice feature, if you ask, certainly from a lender's point of view. And Phil, you know, high buffers can go a long way of mitigating recall risk. Is this why there's so much overborrow in Taiwan? We've got a couple of slides here. There's a lot to take in there, but the orange shows the short sell on a monthly basis, and you can see the blues are the type of borrowers that are arranged. And clearly there is a lot of overborrow in Taiwan. Would this be part of it?
I mean, there is definitely a lot of overborrow in Taiwan. Some of it is definitely around recall protection. There aren't actually that many unknown, you know, outside of the regulatory concerns that as a borrower we have, and I think we'll cover that in the last point. On a day-to-day basis, there's not as many recalls in the market like Taiwan as there are in many of the other Asian markets. The supply is normally well flagged, whether it's callable or not, and the inventory from offshore is pretty sticky. I think partly the overborrows are due to recall protection, but a lot of it is to do with you know, the pre-borrowing. And if you're going to return the stock and then re-borrow it the next day, it becomes very expensive from a transactional point of view. And I think, you know, that is a bigger issue is with regards to the actual overall recall protection.
Can I ask a question? I think, Wayne, you recognise that obviously one of the challenges in Taiwan is the kind of mismatch in settlement cycles on settlement day. So purchase and sales are settled at a different time. I've heard, forgive me if you're about to talk about this anyway, but I've heard about something called a due bill to settle the lender's selling position to cover that gap. Can you maybe elaborate on that? Is there something you know, in the plans to kind of improve upon that kind of fundamental issue?
So I want to make sure I understand you clearly, because some lenders are hesitant to enter Taiwan market because they may have the situation to sell and recall on the same day.
Correct.
But there is a 1 hour gap on T+2 day, because when they sell, they need to settle on T+2 at 10 o'clock, while they didn't receive the shares recalled from the borrower until like 11 on T+2 day. So we recognize there is a 1 hour gap. So we in the exchange, we provide a facility, a bridge to help those lenders who sell and recall on the same day. as a matter of fact, one of the major lenders whose Asian operation based here in Tokyo, together with us, did a thorough research about that kind of facility. And after that research, they felt comfortable to enter our market. And that shows the significant growth of the supply of our market. So I want to take this precious chance to tell the audience that we recognize the situation and we stand ready to help you.
So just one more question with regard to this sort of aspect. And Wayne, I'm going to tap you up for this one. Why is the proportion of government lending or fund lending reducing? Are there any other trends of the different types of onshore?
So, from our statistics, it is true that the government funds market share dropped from like 7% of the total lending from 2 years ago, and is currently lower than 2%. And before I came here, I contacted one of the officials who is responsible for that, and I was informed that they are not going to change the situation. But the good news is that the market share they lost is replaced, more than replaced, by local individual investors who entrust them their shares to the local brokers. So that's a very steady, long-term supply for the SBL market. That is more than replaced.
Yeah, good to hear. I'm going to move on, and Phil, you've touched on this, the expensive market aspect. Firstly, on an intermediation base, the intermediation fee of 2 basis points for both sides. Is this untowardly high or expensive? And there's clearly other costs involved in Taiwan. We have commented on this already, but any other thoughts?
I mean,
Positive thoughts?
in itself, no, it's not a huge cost, but Tim Murch and myself have been going through this a lot in the Taiwanese market, and when you look at all the underlying costs that add up when you're short selling or borrowing, let alone not getting into sales tax or anything like that the short seller will incur. You have TDCC charges by the TSE, both per transaction and on the monthly basis. There's reasonably high custody charges, very high if they're doing a lot of manual work. The more automation as a prime broker you do, the more you can reduce those costs. You have exchange fees. In some instances, you have brokerage fees. The actual equity transaction itself, there's fees on that to short sell typically. So fees if you're borrowing, fees if you're returning, fees if you're cancelling. There's just a lot of implicit fees involved. I think the good news is that actually, if you look at the typical fees that a client of ours will pay, and just across the street, they're not actually sky high unless the position is particularly crowded. So I think somewhere between all the participants, we're managing to keep the fees reasonably in line with the other markets in the region. But there is an awful lot of transaction costs that need to be factored in.
Okay. Thanks for that. And look, talking of costs, collateral, as I'm sure we'll all be learning and hearing about over the next couple of days, is clearly a huge aspect for all of us. Wayne, what other collateral currencies have been asked for, and can the system going to support that going forward? Sorry, the different collateral currencies.
Actually, we have some requests from basically the European borrowers who ask us to allow them to deposit euro as the acceptable collateral, and we stand ready to accept that as long as the government agrees to do so. We can do just like the futures exchange. They accept 6 kinds of currencies. including euro and Hong Kong dollar, Japanese yen.
Okay, great. Hopefully that will help some of the costs for us. I'm running out of time, so I'm going to go straight into some short-selling questions if I can. Wayne, generically speaking, what reforms and steps have the stock exchange taken to boost the opportunities for clients to take advantage of market moves?
So last year in September, when the new chief commissioner of our FSB, he launched a series of major reforms, including to exempt the Arctic rule for it used to be 150 stocks exemption from the Arctic rule, but it is now more than 1,200, and that is almost the market. And for the buy and sell day trade, it is allowed for like 200 stocks. And as for the the broker dealers, they are allowed to enter the buy and or sell order at the ceiling price at 7%. On top of that, the hedging activity of the the dealer, securities dealers are exempted from the daily short sale limitation. So that kind of enlarge the ceiling of the daily short selling.
Okay. Thank you. Phil, one for you. From an activity point of view, we can look at the graph here and we can see that there was a nice run in 2013, peaks there in July, and then clearly in line with a lot of the other forces around in the emerging market space, we have come off a bit. But could you give us a bit of colour as to the reason why the activity has increased, and was it due to how did the quotas play into that, and is there need for any more market reform still?
I mean, if you look at this chart here, it's actually quite cyclical over the AGM and particularly the dividend periods there. So although it looks like the volume numbers are coming down, I think in the summer months of last year when it's at its highs, it's definitely around the dividend cycle where stocks being returned and reborrowed and then reshorted and unwound. Last year, I guess, it was exacerbated with the MediaTek event trade that was on in the market and a few other notebook names and so forth around that time. But I think the reforms that Wayne has been continuously working through in his team at the exchange have been very positive, and hopefully we see more signs there. The quota concerns is in terms of actually getting the executing off is always a big concern for anyone on the PB side and our underlying clients. But I think there's no reason why we won't see a similar return to these these volumes as we go through the upcoming AGM and dividend cycle.
Okay, sorry guys, your time is up, so to speak. Just quickly before we move on, any questions from the floor? No? You sure? Okay, so
You cut me off at regulation. Excellent. I don't have to talk about regulation.
okay, thank you very much, guys. Now we're going to move on to